Hello and welcome. My name is Brian Caplen, editor of The Banker. And we're at the Brand Finance Forum. I'm with David Haig, who's the Chief Executive of Brand Finance. And David, we've been doing this ranking now since 2006. Why do you think it's been so successful and popular with the banks, and they've become so interested in their branding opportunities?
The banking study has been going for 10 years now, and during that period, two things have happened in the banking industry. First of all, there's masses more choice, and secondly, reputation and trust have become far more important than they were before. So in a market where you get choice, you really have to have strong brands, and technology is driving that choice and making more and more choice available. So that's why brands are increasingly important.
Because you mentioned technology there. Now, technology is the theme of the discussion today, and technology is really revolutionising banking, isn't it? We've got mobile banking, internet banking, we've got all this engagement with social media. I mean, what do you think of the branding opportunities for banks with all those new avenues of approach to the customer?
Well, new technology creates change, and there's no doubt that if you look at the banking market, things are changing very rapidly. In the old days, the banks could sit there and just ignore change because they had franchises that didn't change much. Now technology looks as though it's going to change the playing field, rapidly in the next 5 to 10 years. So they've really got to wake up to it.
Okay, and one very interesting thing about the ranking is this year we've seen huge progress by the Chinese banks, which wasn't the case before. I mean, it was normally dominated by international Western banks. So, I mean, do you think the Chinese are here to stay, or is this just a one-year thing?
Yes, I do think the Chinese are here to stay, and they're not just here to stay in banking brands, they're here to stay with all brands. People sometimes forget that China is the second biggest economy in the world and is rapidly trying to become the biggest economy in the world. Its brands are going global. Even here in London, you now see Chinese bank brands and other brands all the time, and that's going to increase.
Hello and welcome. My name is Brian Caplen. I'm editor of The Banker. We're at the Brand Finance Forum. I'm with Chris Clark, who's the Global Head of Marketing at HSBC. And Chris, this morning you were talking about social media. So what is the opportunity for a bank like HSBC with social media?
I think one of the things we've learned by engaging in social media is you get a chance to have a much more kind of complete discussion with your customer. We have interactions with our customers across about 11 different markets now, across social media platforms like Twitter. I think we've seen some amazing engagements, particularly in areas like LinkedIn, with customers interested in doing business in China, where we've built communities of like-minded customers. So for us, it's a really, really important kind of crossroads between marketing and customer service.
All right, but I mean, is it possible to measure the impact at all in terms of revenue, or is it purely a sort of, reputational good feel factor?
I think it's always difficult to say that there is a revenue genuine sort of uplift in any way, because essentially social media isn't necessarily the right place to do hard selling. So therefore a kind of banner campaign in a standard set of digital buys that we would do to generate personal loans, I can do the wiring diagram. For this, I think it's really about understanding that it's where your customers need you to be, and how you justify that on a business case basis can be based on everything from retention levels to engagement levels with customers to genuine customer satisfaction. So for us, we are doing our best really to just look at the volumes of traffic and the kind of quality of conversations. I think we do have to assume there's a positive business impact on that. It may be that it keeps people out of more expensive channels. It may mean that people get an answer a damn sight quicker than they would if they had to get in their car, drive to the local branch, park, get out the car, walk it, So it's much easier. I send you a tweet and you respond, and I can get sorted out what I need sorted out in the comfort of my own home or even on the bus.
Hello and welcome. My name is Brian Caplen, editor of The Banker magazine. We're at the Brand Finance Forum. I'm with Falaki Animumeni, who's the Global Head of Marketing for First Bank Nigeria. So welcome to the conference. And can you tell us a little bit about digital banking in Nigeria and whether it's being taken up quickly or not?
Thank you, Ryan. Digital banking in Nigeria has been taking up very, very quickly. I don't know whether you're aware of the statistics across Africa as a whole, especially with mobile. I mean, mobile is the big thing in Africa. If I take Nigeria, the statistics are about 70 million unique telephone users in a population of 120 million. So digital banking, predominantly mobile banking, is being used for core banking applications, but also for the financially excluded. I think what we're finding is the across the segments. So it's not just the younger generation who've taken it up. You also find that the older generation and the affluent especially are using a lot of digital banking products.
Okay, and at First Bank Nigeria, I mean, what sort of challenges have you faced in terms of rolling out those kinds of services?
I think our biggest challenge has been around legacy. So First Bank in particular has been around for 120 years. So we do have a lot of legacy issues. Education was another one, and luckily because we got on that train very, very early on, educating our customers and generally migrating them onto the channels that we wanted them to. But we had to handhold them pretty much through it. I think those were the two most challenging things for us.
All right, and in future, what is the bank going to look like? I mean, will you still be increasing bank branches at the same time, or will you start to reduce those and focus purely on the mobile element?
What we've done is we've actually started reducing bank branches.
Oh,
but
yes, okay.
but we're not going for a strategy where we're focusing predominantly on. We're trying to ensure that we still keep the bank branches, because in a lot of Nigeria you still need that because of the infrastructure or the lack of infrastructure, as the case may be. So the bank branches still have a role to play, but increasingly, yes, we're seeing that there's a lot that you can move on to digital, especially the standard simpler things which can be moved onto digital. So you do find that people come into the branches, but at the same time they want to use their digital banking for a lot of the simpler things.
Thank you very much for the update.
Thank you.